So Rick, you mentioned that you're excited for the spot Bitcoin ETFs, and you wrote your book a little while ago. It's been a little bit, right? Your
It came
crypto
out in
book.
2021, The Truth About Crypto.
Yeah. So the truth about crypto, it's been a little while. Things change really quickly in the digital currency market. Can you review really quickly, like some of the core principles that you emphasize for investors in your book?
Well, the real key is to understand that this is a brand new technology. It has nothing in common with any of the asset classes we've grown up with. It has nothing in common with stocks or bonds or real estate or oil and even gold and precious metals. It is totally new and different, and therefore requires a new and genuine look at it to understand the underlying technology of blockchain, which is software. That's the difference between this and fads. This is a technology that has business application, and Bitcoin is the first use case of blockchain technology, but it doesn't stop there. It merely started there. So people need to simply understand how this works. They need to also understand the risks. They need to understand how you fit it into a diversified portfolio. You need to understand the technology the same way people need to understand how remote controls work to access their home audio video gear. This doesn't come naturally because it's something that we're not familiar with. So I believe that it's an exciting technological innovation because blockchain technology allows businesses to operate faster, cheaper, safer than traditional ledger technology has allowed businesses to do. And it's going to be able to help companies save massive amounts of money and by extension, increase profits. Because of the nature of the technology, it also allows for inclusion. People who currently don't earn enough money to open a bank account, and we're talking about 1 billion people on the planet, who live in abject poverty, according to the UN. These folks don't have enough money to open a bank account, or they don't live anywhere near one. Well, now, thanks to crypto, you don't need a bank. All you need is a cell phone. You don't even need a smartphone. Just an ordinary cell phone is all you need to be able to obtain a wallet, a digital wallet, and buy Bitcoin. And you can transfer it to anybody, anytime, 24/7, 365, virtually instantaneously and free, compared to the global banking system, where if you wanted to move money from one country to another, it can take 5 days and cost 6.5%, 20% in sub-Saharan Africa. So this is a revolutionary technology that is really changing the nature of finance, which is why we're really very excited about it. But it is new and different, and a lot of it is unknown. We don't know what the regulations are in a lot of countries. We don't have the treaties in place yet. A lot of tax rules are yet to be written. This is, we're kind of like 1920s automobiles. Back in the 1920s, there were 200 automobile manufacturers in the US. Today, there's 4. So we don't know who the survivors are going to be. And at the same time, in the 1920s, cars were incredibly dangerous. They didn't have brake lights. They didn't have windshield wipers. They didn't have seatbelts. And we didn't have stop signs, traffic lights, and speed limits. So the first thing that we had happen after Henry Ford rolled cars off the assembly line is that we had car accidents. It took a while for governments to create the rules of the road that ultimately made cars so much safer today than they were 100 years ago. It's kind of where we're at with crypto. It's new, it's exciting, but it's a little bit dangerous. And that's why you need to have a calm, cool head about yourself when dealing with it. You need to limit the exposure so that you're not harming yourself financially if you do something wrong. You need to learn how to avoid the scams and the frauds, which are unfortunately still prevalent. I am really excited about the Bitcoin ETFs, predominantly because for the ordinary, average, everyday consumer and investor, the ETFs provide a familiar, comfortable, and much safer way to engage in this asset class than if they try to do it on their own, surfing the internet to try to get a digital wallet, dealing with private keys from an offshore unknown entity that could end up being the next FTX. So I like the ETFs largely because they have simplified the situation, they have dramatically increased the safety, and they have made it easier for people as their first step down into that rabbit hole. But I think once people start to get engaged via these ETFs, they're not going to stop there. They're going to discover the problems and limitations of the ETFs. Number one, it's only Bitcoin. It doesn't give you access to any of the other crypto environment, meaning you're not getting diversification. Second, it's a security, which means it only trades when the stock market is open for business, and that's only weekdays except for holidays. Bitcoin's price moves so dramatically, you miss out any opportunity if there's volatility at nights or on weekends or holidays. So and you also have the annual fees of the ETFs, which you don't have when you buy it necessarily on your own. So there are issues, limitations, but I think it's a great initial way for people to get engaged. And this is going to be the door opener that's going to result in millions, billions of people participating in crypto for the very first time. So I think it's exciting, but I don't want us to get ahead of ourselves. I don't want people to put themselves in danger of risking their personal financial security over this. But I think we can effectively achieve a proper, comfortable approach for engagement in this space.